Hello, I'm Frank Holland, anchor of Worldwide Exchange. Thanks for tuning in to CNBC.com. Today, we are talking about the ETF market, where the net inflows this year have topped $855 billion, on pace for another $1 trillion year. And this week, I'm joined by Gorky Urqueta. He is the Senior Portfolio Manager and Global Co-Head of Emerging Markets Debt for Neuberger Berman. Gorky, thank you for joining us.
Morning, Frank, and thanks for having me.
All right. As I mentioned, net ETF inflows, they've topped $855 billion this year so far, again on track for another $1 trillion year. When you're looking at the ETF market, why do you think investors for another year, a second consecutive year, are putting money in there at a record pace?
Well, ETFs, broadly speaking, right, have benefit of being liquid, cost-efficient, and transparent vehicles. In our space in emerging markets debt, we're actually still sitting on flat flows for the year, although we've seen a pretty stark reversal of the flow story beginning in late April, early May. Broadly speaking, the EMD has captured about 20 billion in inflows in the last 4.5 months, and this is after 3+ years of pretty large sustained outflows. So we're beginning to see finally the market putting money into ETFs. We're very excited about this. We think this has legs. Given the macro backdrop that emerging markets debt has to offer right now, which continues to be pretty benign, we believe.
I'm also looking at some data. Again, this data comes from VettaFi. One of the top ETF inflow was in the VUG, the Vanguard Growth Index Fund. Surprised that it's growth going into a Fed meeting and maybe not another cyclical type of fund, perhaps financials or industrials.
Yeah, I think it's a matter of what investors are looking for, right? But again, it's the benefit of and the profile of ETFs. Sometimes it has to do with size, with liquidity. Again, in our space, right, in emerging market debt, where we continue to provide pretty significant yield, and on the back of the Fed initiating another cutting cycle of rates that in the past has proven to be supportive of EMD, with the weak backdrop of a weaker US dollar, that has been a powerful combination in the past, and we believe we're just in the beginning of that cycle of money coming back into the space in EMD, ETFs, active and passive.
Mm-hmm. I want to get to your pick. Investors are always looking for ETFs to play the current market. What is your pick to play this current market?
Well, I'm going to have to talk. I took my book, right, within fixed income, within EMD. We have a vehicle, an ETF, hard currency sovereign. In our space, again, active ETFs or active managed vehicles have outperformed passive ones historically. Something like 70% of active EMD vehicles funds over the last 10 years or so have outperformed the passive ones. We've actually done a little better than that. So we're very excited that we have this vehicle now that we're it's in the marketplace in the U.S. again to provide investors with a flexible, liquid, cost-efficient, transparent vehicle to allocate to EMD. And again, given the scope of outflows that we've seen over the last 3.5 years, really until April of this year, $150 billion or so of money that left the asset class. Put that into context, that represents 15-16% of all assets in dedicated vehicles. So the capacity for investors to bring back money into the EMD space, we think is very substantial. It's been an under-owned asset class for a number of years. And again, given the backdrop and the outlook for still relatively moderate growth, emerging markets growing at stronger rates, better fundamental dynamics, better debt fiscal dynamics, much less debt, public debt to GDP. I'll give you an example. Mexico has printed about $29 billion or so in the last 2 months. That represents about 1.5% of their GDP, and their public debt to GDP is still expected to be somewhere around 55% or so in 2026. Compare that to developed markets, right, where debt to GDP, public debt to GDP is much higher. So fundamentals backdrop remains constructive for EMD.
All right, Gorky Arqueta from Neuberger Berman, thank you very much for your pick and your insight onto the ETF market. Thank all of you for watching CNBC.com. I'm Frank Holland, anchor Worldwide Exchange. Have a great day.